In this video I will do something that I wanted to do for a long time. This time I will make an automatic algorithm trading strategy based on the instructions that were given in the YouTube video. And in this case especially the video on the MACD OBOS or Overbought-Oversold strategy. The link of that video will be in the description and you can see it also on the screen right now. And in my video I will explain again how this strategy works and which remarks I have to the strategy, and then I will show you how I coded this one into a pandas data frame in preparations for the actual code which I will use in my trading bot. With that code I can automatically backtest this strategy's performance. Now this automatic backtest will be specifically on my setup so that I can compare these results with the performance of the other strategies that I've tested in earlier videos. And with all these tests and comparisons, I can make a well-grounded assumption that this strategy might be profitable in real trading. Now before I continue, in the original video where I will base this code on, does not mention anything about a specific time frame or pair to trade. Just that it can be generally used. So here I have some freedom to test it on my own setup to find out if these statements are really true. So let's start with the strategy that is proposed in the MACD OBOS video. Now in that YouTube video the rules for long trading are as follows. Use the 200 EMA as a baseline, and if price is above this EMA then only long trades are allowed. For a long enter, the MACD should cross above its signal line, but this crossover should be below the horizontal zero line. And the stochastics oscillator is the second confirmation indicator here. The long trade should be only made if the stochastics has been oversold in the 25% range in the near past. And in that video there is only spoken of a return from oversold condition. So I think that both these lines have to be returned to levels above 25. And the final signal is given when the close price is above the 12 EMA. So with all these conditions only long trades can be made. According for that video, the strategy is also good for short trades. And in that case all the signals are reversed. So if the price is below the 200 EMA baseline, then only short trades are allowed. And the first signal occurs when the MACD crosses below its signal line, but this is only valid if it occurs above the zero line. Then the stochastics oscillator should return from the overbought condition, and again here I have to make some of my own assumptions how this exact signal is used, because in that video the return from overbought is defined as the two stochastics lines that return from above the 75% level. And finally, the last confirmation is when the price gets below the 12 EMA. There is nothing told about an exact risk to reward setting and also no other exit signal. Now the benefit here is that this will give me some liberty to determine myself how to determine the stop loss and take profit settings. And you have to be aware that this is a slight deviation from the proposed strategy due to a lack of information. Next I will explain a little bit how to create the trading signals in a pandas data frame with the help of the given indicators. Now I will not get into detail how to create the actual code for the backtest engine of the trading bot, since this will make the video way too long. However, I will leave that code on my Patreon site as a downloadable file, together with the backtest results. Now here I have opened a notebook and I will make use of the pandas DA library. So if you have not installed this module yet, then you can install it with the command I will show you on the screen right now. And as you can see, it's downloaded and installed here on my system. Next I will import the necessary modules in my notebook so that I can use them with the pandas data frame. And after importing the libraries, it's time to load the Bitcoin prices into the data frame. And for that I will use a downloaded JSON file with the Bitcoin prices. Here I will rename the columns so that it's a little bit more recognizable for me to look at. And I will change the date into a human readable date time. Okay, now that this is done, it's time to add the indicators into the data frame. And in this strategy, the EMA 200, EMA 12, the stochastics oscillator and MACD are used. So let's first add the MACD indicator to the data frame. And in this case, I want to show the output of the pure pandas MACD signal to the notebook here. And if I want to add it to the data frame, I have to add the output of each and every column to a specific data frame column. And this looks good. So now that I have the MACD in my data frame, let's also do this for the stochastics oscillator. But here I'm going to change some indicator values. So if I do this first in the raw output of the pandas TA indicator, and notice I've changed the base indicator values over here, K, D and smooth K. And you can see here that I have two columns in this data frame output. And you see here at the end that the stock K has its own data frame column and the stock D has its own data frame column. Now I only have to add the EMA 200 and the EMA 12 indicator. And then I'm all set to create the signals for long and short trading. Now the easiest signals to create are that of the EMA indicators. First I'm going to create basic long and short position columns based on the EMA 200 and then a signal column based on the shorter time range EMA 12. And here the next two columns are indicators to determine if the price is above the EMA 12 indicator, and I'll use the same principles here. So long if the price is above the 12 EMA and short if the price is below the 12 EMA. And after all this has been done, now come the more difficult signals to create. As I told earlier, the long MACD signal occurs when there is a bullish MACD crossover above its signal line, but this has to happen below the zero line, and vice versa for the short MACD signal. Also, the stochastic signal for longs is valid if the stochastics were first in oversold under the 25% level and now in neutral terrain above the 25% line. And again, for shorts, this is the reverse. To create the MACD signal for long and short trades, I'll have to create a function that adds a signal column to the data frame and determines the signal for each respective row. And here I will only make a long signal if the MACD is above its signal line, but both lines are still under the zero level. And the reverse is for bearish signals. The MACD should cross below the signal line, but only above the zero level. At that moment, the signaling function will determine the signal for each row in the data frame, and you can see the output right now. Now it's time to create the stochastic signals. I will take the liberty to only use the D line for my signal, since this line is slower than the K line, and it is a little bit less prone to zigzag across the 25 and 75% levels. I'll also make this function so that other buy or sell signals of the other indicators should occur within 5 candles of this overbought and oversold condition. Otherwise it's a false signal here and there will be no trade. And of course you can play with this time length to see which one gets the best signals. So now I have this function, I will apply it to the data frame. And I can show you here in a small sample that there are some overbought triggers. And of course I can also do this with the oversold triggers. But this is not enough, of course. Let me show you the last 50 entries of the data frame to see how the signal is changing from neutral to overbought or oversold. And then after that has finished and it's returning to the neutral zone again, then the trigger will happen. So let's put this all together, and now that I've created all the individual signals here in the data frame, then I can create the definitive buy or sell signals for trading. Now this is pretty straightforward since all conditions are here, but only have to be assembled to form the original final signal. Here the signal is go long if the EMA is true, then the MACD signal or condition has a long signal, and the stochastics condition has an overbought trigger. And finally, if the EMA long signal is also true, so close price is above the EMA 12. Let's now check this also with the short signals. So to go short, the EMA 200 short should be true, the signal. Then MACD condition should also have a short signal. Stochastics here should have an overbought trigger. And finally, the EMA12 short signal should be true. So here the close price is closing below the EMA12. And as it shows now, it's also looking quite good in my humble opinion. So let's create the strategy file, but I will do this off screen because this can be a pretty tedious process to get all the code right, because I don't want to make this video unnecessarily long. It's long enough as it seems right now. So I will return if I have the working code ready and I have the backtest done on the strategy with multiple time frames and with multiple cryptocurrency pairs. Hopefully all my efforts have not been in vain and the original YouTube creator has a good strategy made that can compete with at least the top 10 in my strategy league. With these backtests, I took the liberty to make use of the default spot stop loss and take profit or ROI settings. This is my personal take on this strategy and a slight deviation from the original YouTube video. The reason is that the actual risk and reward ratios or values are not really explained over there. If I try to use a 1:3 risk reward ratio here, then my stop loss point to exit the trade is a 10% stop loss and take profit and ROI is reached if the trade has 30% gains. The first backtest I did was with futures trading, and as you can see here, I got some very mixed results. The 4 hour, 1 hour and 15 minute time frame had positive results, but the other time frames this strategy did not perform so well. If I only stick to the most noticeable results here, then the strategy, as it now seems, has a very poor win rate. On all time frames it's under the 30% and these win rates are more to expected on trend trading strategies. The amount of trades is also low on the lower time frames and I expected to see more trades here. On the best scoring time frame, the number of back-to-back losing trades on average is pretty high with a maximum of 42 losses back-to-back. Manually trading this system might be a frustrating exercise at some point. And this is also shown in the exit reason stats of the 4 hour time frame. As it seems now, after each trade the price moves to the opposite side, taking it to its stop loss point and exit the trades. And I consider a stop loss percentage of 10% pretty wide. If I look at the profit chart, it looks very jagged. And I think that the signals this strategy gives are not always correct. This might be caused by the signal settings of the stochastics, where a signal is only valid after it has returned from overbought or oversold levels, and these levels might be too high to generate more profitable signals. Also, only using the MACD when it is on the opposite side of the zero level might prevent taking more profitable trades here as well. But let me ponder not too much at these results, maybe long trading only has better results. If you want to use this strategy with spot trading, then you have to endure sort of like the same experience here. If you do not consider the profit percentages, but only the ratios, then you see there is not much improvement. Still low win rates and high drawdowns, and the profit factor is even slightly worse than that of futures trading. The only and main reason why this end score is higher is that the profit percentage is higher. As already said, the stop loss setting I chose is the main reason why the strategy performs so poorly, and maybe the initial 10% stop loss is set too tight. Also maybe the take profit percentage is set too high too. So in a way I should risk more capital per trade in order to gain slightly less profits. The only way to find this out is to optimize the settings here. And coincidentally, the bot has a hyperparameter optimization engine that can help to find the best settings. So let me kickstart the computer, calculate these optimal settings and retest the best performing spot time frame again to find out. Because the spot backtest on the 5-minute time frame performed the best, I optimized this specific time frame. And because I thought that the biggest problem lied within my choice to deviate from the proposed but vague stop loss and take profit values, I chose to optimize only the ROI and stop loss settings. So after letting my PC calculate for almost 8 hours, I got some new ROI and stop loss settings from the optimization engine, in the hope that this could improve the performance significantly. And the hyper-optimization indeed calculated that a better performance could be reached if I risked more by setting the stop loss to over 30% and lower the reward to a little bit over 20% take profit. But unfortunately, the backtest shows very disappointing results. It's even making the strategy perform as one of the worst versions. And that is something you might not expect after an optimization run. Strangely enough, that is surprising and logical at the same time. The ROI is performing quite well with these settings because it exits with a win or a draw. But here the stop loss is set way too wide, and with these few times it gets hit, it drains the complete account. And the occurrence of the 11 losing trade streak from the previous table could mean that with these 11 losing trades, your account gets completely blown in one streak. So, what is my conclusion after this? Well, I do initially think that the proposed strategy in the YouTube video has potential and that the maker indeed has very good results when he tested this strategy. However, I tried to test these hypotheses on a larger scale with more assets, larger date ranges and multiple time ranges to see if it's a good strategy for algorithmic trading and hopefully completely automatic with a trading bot. You can argue that I did not 100% correctly follow the proposed strategy to the letter, and I am not denying this fact, but I did experience to have better results. For example, the trade signaling quantity is way too low, even on lower time frames, which might indicate that the initial settings on which the signals are based have to be further optimized. Figuring out where the exact problem lies can't take much time, and I'd rather search and improve another algorithm that performs good right away than trying to improve a mediocre one. But I hope you have learned from this video nonetheless, and I have shown you enough information that gave you some nice ideas to make some improvements to your own algo. If I look at the strategy leak, the initial 5-minute spot version of this strategy scored slightly below the middle. Let's hope that in the next video I test an algo, I have one that performs way better than this one. So now we're at the end of this video. I hope that you got some new ideas and information and you liked it. And if you do, then show this by clicking on the like button and give me a comment. And if you stumbled on this video and you like what you see, you can always subscribe to my channel, and by clicking on the bell icon you will also be informed when I upload a new video. So thank you for watching, and I will see you in the next one. Goodbye.